Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISEE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.isee.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So what I want to do, I just want to, in terms of, I do want to answer the questions. I just want to, kind of come to a conclusion here. And that's simply to say that we have a unique put-call calculation methodology. Again, using proprietary trade data, using customer-only opening long trades. And again, we feel, in its purest sense, it's an indication of bullish or bearish sentiment. All right. We think, as we did for 2007, we think the ISEE index has been a useful tool for 2008 in terms of detecting changes in the market direction. And of course, we cannot guarantee the performance will be repeated. But again, we think it's a useful indicator, another indicator worthy of having in your toolbox. It's not, there's no guarantee that it's always going to work, but certainly since we've been looking at this a little bit closer for the last basically almost a year and 9 months now, it's done a very good job at indicating market turns. All right. So again, this is just the way we happen to look at the data. If there are other quantitative or analytic people out there that want to look at the data themselves and form their own conclusions, the intraday and the historical values are available for free at the ISEE website. Again, the URL is www.isee.com/ISEE. You'll see there that we update the values intraday every 20 minutes. And the historical values are there for download going all the way back to 2002. Also on the website, we provide different calculations. We provide the overall put-call value for the overall market. Again, it's a single value for the overall market. We provide a single value which is for the equities only put-call ratio, and again, the reason why we switched to that a year ago this past July is because many other people that look at the put-call ratio tend to look at equities only, which then separates out the third calculation that we provide, which is a single value for indices and ETFs. So you'll see three values there. And when you pull up the history, again, basically you can open up, it's a CSV file which you can open into Excel. There's no equities only or ETFs and index values until 2006. So you're going to have blank columns till you scroll down the page and get to 2006. But the data is there. If anybody does happen to do some additional analysis and wants to provide us some information, by all means, I'm going to give you my email address on the next slide or two. Please send me, any conclusions or analysis that you come to. If you see someone else that happens to write about it and you think the article is interesting, please forward that to me as well. I'd be happy to put a link up on our website if it's a worthy article that warrants being posted. All right. So at this point, what I'm going to do, I'm going to go through questions and answers here, and there's quite a few of them. Let me see what we have. Okay, let me just scroll back up the list here so I can make sure I'm getting to the top. All right, so we went through we gave out the link to the white paper, which was there. All right. The question was, do you only use equity calls or index also? All right. Again, the ISEE, we calculate three different values. ISEE index, which includes all customer opening long calls and puts. Then we provide an equities-only calculation and index and ETF only calculation. So there's the three values on our website. Again, they update every 20 minutes for the day. Where's the 2007 the white paper? If you don't see it there, I will send out a link for it. We set up a new page here, and I thought if you go to the ISEE white paper, there should have been two there, but maybe there's not. Let me check on that link, and I'll send out an email tonight for that. All right. How many events constitute a cluster? Basically, in terms of the cluster, what we really look for, and again, I don't want to take credit for this. I'm basing it off of what other people have written about the ISEE. A cluster consists of at least 2 consecutive days. Has to be consecutive days. 1, 2, 3, 4. I think we've seen as high as 6 consecutive days in a row, 5 or 6 at least. So what constitutes a cluster? At least 2 consecutive days will constitute a cluster. All right. Question, can we print the slides or can we replay this recording? Yes, we will post a link for the replay of this presentation will be available. We'll put that up on the website. Do you have any plans to provide perhaps a 21-day moving average to smooth out the graph? Honestly, I think that's a great question. It's not the first time we've been asked to provide a moving average, but I will tell you we've been asked to provide a number of different moving averages. There's, depending on, what you're looking at, 21-day is certainly popular. I've had people say, no, I want an 8-day or I want a 13-day because I want the Fibonacci numbers, 5 days, 200 days. We've kind of had it all. That's why using the download with a spreadsheet within Excel, quite simply, you can graph the data, including any moving average that you'd like. And because I can't satisfy everyone, rather than put up any moving average, I just feel that it's easier to let people run a moving average for themselves.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.